Many thanks for joining us on our Tuesday Business News Report. It's now time to bring you the feature on the show today as we focus on the banking sector. Now, the aggregate non-performing loans of 9 banks increased to 814.08 billion naira in the year 2021, representing a 3.16% increase from the 789.14 billion naira which was reported in 2020. Now, according to reports from the 9 banks, which include Access Holdings PLC, Zenith Bank PLC, Wema Bank PLC, FCMB Group, Union Bank of Africa PLC, and Stanbic IBTC Holdings, others are Guarantee Trust Holding PLC, United Bank for Africa, and EcoBank Nigeria. However, now with the banking sector's non-performing loan ratio closing last year at 4.85%, some of the 9 banks remain within the 5% non-performing loan ratio stipulated by the Central Bank of Nigeria. MPC members in the first meeting for the year 2022 also noted the sustained resilience of the banking system following the progressive improvement in non-performing loan ratios from 5.1% in November 2021 to 4.85% by the close of the year in December, a first in a long time. Well, joining me now to discuss this and much more virtually, I have Olusegun Elemo, a public finance and policy analyst. Thank you very much for joining us on the Breakfast Show this morning.
Yeah, thank you for having me.
Now, we all acknowledge the sustained resilience of the banking sector following the progressive improvement in non-performing loan rates now from 5.1% in November last year to 4.85% by December. This is really a first in a long while, a commendable feat, wouldn't you say?
Yeah, it is commendable because it appears that there have been some sort of laxity on the part of the Apex Bank for a long time, and commercial banks have just played a discretionary role in that space, giving loans to whoever they deem fit, and in some cases giving loans to themselves. But it was good that the CBN then decided to peg the NPL ratio at 5%. What we see happening right now, it's not because of some extraordinary measures on the part of the CBN. It is just simply because now they are playing some strong oversight, roles, and then putting restrictions, on the ways of commercial banks in awarding loans, giving out loans discretionarily. If you ask me, really, it is not because the policy indicators point towards NPL dropping. It is rather because the CBN decided to peg the NPL ratio for commercial banks at 5%. And if it then pegged it at 5%, it means that banks really have to do lower than 5%, and that's why you saw the ratio dropping to 4.9% thereabout. Really, what are the causes of NPL rising? You have a high interest rate. You could say that the MPC meeting over the last couple of months or quarters haven't really pushed interest rates upward. So they've maintained parameters. So you could say maybe that really may not have aggravated NPL rising. But look at the GDP figures, look at inflation, look at unemployment, and then again when you see what the CBN has done in the last year or so, giving money, loans to the agriculture sector, which indicators are pointing towards not being able to recover those loans. So in the end, you may see NPL rising over the next couple of months if those loans that the CBN gave to the farmers are not is not able to recover them.
see banks' credit to the private sector rise 4.2%. This has also hit 36.9 trillion naira, and also credit to the government. We saw a rise of about 22.5% to hit 16.3 trillion naira in the first quarter of this year. But how critical would you say it is to broaden access to credit? You've made mention of interest rates. Address these issues around interest rates, which are a major challenge for most MSMEs in the country. These are critical engines of the economy, yet it's quite difficult to access funds. We have the likes of the Bank of Industry, but there's the sentiment whereby it's not easy to get funding from that as well.
Well, it appears that the priority of the Apex Bank it sort of I wouldn't know how to describe it, because when you look at the facility given to banks rising to there's an upward rise of about 4.2%, and then when you look at the credit given to government at about 22.5%, then it kind of gives you an indication of where the priority of the Apex Bank lies and how it intends to stimulate the economy. Yes, the central bank has a role to play in providing ways and means lending to government. But even at that, there is limit to how much central bank can give to government in terms of credit. And then it appears that when you look at the MPC outcome over the last quarter, like I said, it was like the CBN wasn't going to go expansionary or contractionary. But when you look at what has happened with these credits, it appears that the CBN indeed has been implementing expansionary policy measures. And what will that do to the economy? For instance, it will increase money supply, like you are seeing on the part, and not through the commercial banks now, but through governments. Now, it's maybe ordinarily it should lower interest rate, but the central bank, like I said earlier, are decided to maintain parameters, especially with regards to interest rate. Then it increases demand, which then push up prices of commodity, which is what we're seeing in the economy today. And then you wonder why inflation is rising and why product prices are also rising in the market. Then again, of course, it devalues the currency, it decreases the exchange rate. So when you look at what has happened, really, the CBN has been on an expansionary, road, traveling on that road, but it doesn't claim to have, to be doing that. But that is what is happening today.
Is happening today. Another challenge to the feat of the steady decline in non-performing loan rates is the reality of inflation, which definitely challenges the repayment strategy of companies and business entities that have taken loans, especially for those struggling to stay afloat. They don't have that buffer as much for large corporates ordinarily have. Now, from energy price hikes to other operational costs, it's quite difficult doing business in Nigeria today. How much of a burning issue, and what next move do you expect from the CBN's Monetary Policy Committee meeting, especially with regards to reining in inflation and ensuring that we have inflation under control so that we have businesses and entities that can repay the loans they take and not have to overshoot their budget?
Well, it's really going to be a big challenge. And you could see that, for instance, look at the aviation sector. There's complaint here and there on the price of Jet A1, and then even look at the, even the real sector. Look at even the manufacturing sector. The manufacturers are complaining on the cost of operation, and then government is still subsidizing PMS because if government decides to take away some PMS, the ripple effect on the economy is going to be huge. And that is to say, much of the businesses, SMEs, rely on alternative energy to be able to continue to operate. Now, in terms of how that will impact NPL, it's certainly going to impact it. And then again, is what I mentioned earlier, some of the loans that the government, CBN itself, are given to farmers. I'm not sure the CBN will be able to really recover, if at all, maybe everything that, all the credit facilities that are given to farmers. And then again, even the private sector players, how, the current issues, economic issues is going to play out and affect their loan repayment strategy. Yes, it's going to, but for NPC, what I would expect is that they should cut down on the ways and means lending to government. Okay. I think that is what is critical here. If NPC is going to redirect, it should redirect its credit facilities to commercial banks, who will then in turn, empower the private sector players to be able to stay, properly afloat. I think that's the direction I feel the NPC should travel, over the next couple of months ahead.
Definitely, credit accessibility is one big element to sustain the stimulus and the momentum we are seeing within the recovery process of the economy. Thank you once again for your time on the Breakfast Show this morning, Olusegun Elemo. We keep our fingers crossed to see the agenda for the CBN's Monetary Policy.